There is a reason why I'm covering this particular EV stock. There's also a reason why I'm talking into my phone right now. My microphone broke, but bear with me, dial in, and get ready for some digestible, hopefully valuable research on this EV play. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things ChargePoint, or what is currently SBE, Switchback Energy Acquisition Corp. And no, I don't usually use my phone like this. If you've been following my channel for a while now, you'll know I usually don't cover EV stocks. I initially got into Tesla and then I got into NIO at around $11.80 per share, and that's because I thought those two companies had the highest staying power in the EV sector. And by that I mean, if all EV stocks were to someday crash, I think those two have the fundamentals to be the most resilient or crash the least. And from what I saw, those two had very clear paths to profitability. Now the question today, is ChargePoint the third stock to fit that criteria? And a lot of you guys have been asking me about this one, so without further ado, give me the format. First, the investment philosophy of the pickaxes in a gold rush, how I've used this effectively in my investments, and why it could make ChargePoint a potentially genius EV play. Second, a look at ChargePoint itself, its history, the business, and much more. Third, a glance at their juicy financials. And finally, fourth, what am I going to do here? No time wasted, let's get right into part one, pickaxes in a gold rush, and investment philosophy. This is the idea that when everyone is going to mine gold, the real money and the more guaranteed money is in selling the pickaxes and pans and shovels rather than trying to pick the right mine, river, or group of miners. Let me give you a scenario. Say you're in the gold rush and you have some money to invest. Would you rather invest in one of several different miners who say they can all expect to find $1 million in gold but haven't actually found any yet? Or would you rather invest in a store that sells tools to all of these potential miners, and no matter who wins and finds the most gold, you are almost guaranteed to make good money?
Why, I wouldn't go on one of them wild goose chases for all the gold in the world. No siree, Bob.
Well, Sam Brannan opened the store, and he was known as the richest man in California during the gold rush. Just don't go gamble away your money like he did at the... Oh gosh, that's unfortunate. This investment philosophy was actually a huge part of my investment thesis for the trade desk. We're up over 141% on that in the Roth IRA and nearly 100% in the growth account. In this case, rather than investing in which streaming service is going to win the streaming wars, I just invested in the trade desk, which benefits from the streaming wars even happening. It's also why I think Roku has been a great investment for people as well. Rather than place a bet on which streaming service will win, invest in the company that allows these streaming services to run, grow, and work. And here's where we tie it all together. With ChargePoint, rather than trying to invest in one of the many EV automakers, many of which are pre-revenue, meaning they expect to reach, say, $1 billion in revenues but actually haven't made any money yet, why not invest in a company that is charging these EVs so that no matter who wins the EV race, no matter who strikes gold, the chargers will still be making money, thus ChargePoint will still be making money. But this isn't to say that I think everyone should just go invest in ChargePoint right away. Another investment philosophy that I try to live by is the best of breed investment strategy. For example, in my opinion, Teladoc is the best of breed in telehealth. Celsius is one of the fastest growing energy drinks. Upwork had the best valuation amongst gig economy stocks. So let's answer, is ChargePoint the best of breed in part 2, an overview of ChargePoint as a company, its history, and maybe some recent news. ChargePoint was started in 2007, so this isn't just some new hot startup. They've been around for 13 years, and later we'll talk about how this could actually be a competitive advantage. Now, we all know that the EV industry is set to fly over the next decade or so. It's a market that's expected to reach $802 billion by 2027 at a CAGR, or compound annual growth rate, at 22.6%. And the electric charging market is actually expected to grow faster at a CAGR of nearly 40%. I'm also honestly a pretty big fan of the fact that ChargePoint has gone with a recurring revenue SaaS approach to the charging business. And you may have seen this chart already, but I think it's important to show again how their revenue is directly proportional to passenger EV sales. In terms of customers, more than half of the Fortune Top 50 use ChargePoint, which speaks to their credibility as a business and also remember I said we would get to this, demonstrates how their 13 years of being in business may actually play into a competitive advantage in winning over more customers. In terms of markets, they're primarily focusing in North America, where they claim to be the de facto leader, and also in Europe, which looks like it has a lot more opportunity for growth, not just for their business, but also in terms of EV sales. In fact, in Europe, EV registrations were up by almost 2/3 in June 2020, up from a year ago, versus registrations of petrol and diesel cars, which fell by 1/3. And much of this can be attributed to government grants, which we are seeing implemented globally. Now, looking at their account expansion, this is definitely a great sign, but they do make it seem a little better than it actually is. Accounts haven't actually increased by 5x, 27x, and 24x. If you read at the bottom here, this multiple is the cumulative billings from 2017 to 2020 divided by 2017 billings. It is not 2020 billings divided by 2017 billings. So again, making it look a little better than it is, but after all, that is their job. That's what they're supposed to do with this presentation. Just a reminder to always double check the details. However, at the end of the day, they are increasing customer spend. They do have 7 times the amount of market share as other charging companies, but this is for networked L2 charging, which is a specific kind of charging station. And they also left out Tesla.
You naughty, you teasing me, you naughty.
Because I guess they don't consider it a charging station, maybe because Tesla doesn't have universal charging. But if we look at some research not found on their investor presentation, we see that yes, ChargePoint does lead in overall charging stations when it's considering both level 2 and DCFS connections, and level 2 chargers are represented by the green bar on this chart. But look at Tesla right there, way above Blink as well. ChargePoint is definitely not 7 times Tesla's amount of chargers, especially when we look at just DCFC stations, which are actually faster charging stations than level 2. In this case, Tesla wins big time, and ChargePoint is actually in 3rd. Now, this data is as of March 31st, 2019, so do keep that in mind. So let me just ask you this. When it comes to EVs, would you rather have your car charged faster or slower? The odds are probably faster. In this case, I would point you towards the DCFC chargers, which is the chart that we just saw where Tesla was actually 1st and ChargePoint was 3rd. Also, who has always proven to be ahead of the curve when it comes to the EV market and just general innovation? Tesla. So there's probably a good reason why Elon has invested in almost equally into DCFCs as they have into level 2 charging, whereas ChargePoint is very heavily into level 2s. Now again, this data is over a year old, but just something to keep in mind when doing your own DD. Now, I'm not denying the fact that ChargePoint does have a hold on the market right now, but looking several years into the future, if everyone starts shifting to level 3 or DCFC charging, which is the faster option, will ChargePoint be able to keep up and hold their position in the market? Personally, I think they will, because they're getting a good amount of cash on their balance sheet from this merger, and they're wiping away virtually all debt. So I think they have a lot of money to expand into DCFCs. Again, I'm just trying to bring up something that maybe you haven't seen in other videos elsewhere. Also, as an honorable mention, ChargePoint just teamed up with Apple to be included in Apple CarPlay, which means drivers can now find ChargePoint stations very easily on their dashboards and navigate right to it, and has already begun to roll out across the world, so this is really exciting. All right, let's talk about part 3, their juicy financials. ChargePoint expects to have positive EBITDA, which is earnings before interest, taxes, depreciation, and amortization by 2024. And if I'm interpreting this correctly, their merger should fully fund their business until they are cash flow positive, which would be really great to see. However, in my opinion, their projected 60% compound annual growth rate for their revenue is certainly aggressive, especially when you consider that several articles cite the electric vehicle charging stations market as expected to grow at a CAGR of just under 40%, not 60. Some reports are even saying it's going to be in the low 30s. But again, they have proven that their revenues are directly proportional to EV penetration, as it has been for the last 9 years. And I definitely think their SaaS approach to the charging market could help ramp up their revenues, but also give them a lot more visibility and predictability, so they probably know something I don't. Of course they do, actually. It's their company. For their margins, they're currently sitting at 20 to 24%, and they hope to get this into the 40s, which would certainly help with profitability, seeing that as of January 31st, 2020, they are not currently profitable. Additionally, any SBE investors should note that you're only getting 10.3% of ChargePoint by investing in SBE. I feel like a lot of videos make it seem as though we're investing in Switchback because it's going to wholly own ChargePoint, but that is just not the case. On the bright side, ChargePoint's balance sheet should be clean of debt after this merger, and they should have a lot of cash left over to aggressively expand their network. And maybe, they might invest in more level 3 charging or DCFC charging that we mentioned before. Overall, their financials don't make this an absolute screaming buy in my opinion, also when you consider their valuation, but it is great to see actual millions of dollars in revenue coming into the business, debt-free balance sheet after or if the merger is completed. However, I'm still going to label this one a big fat spec play, which I'm sure you guys already knew. Now for part 4, what am I doing? To be quite honest, I absolutely hate trying to time entries into these SPAC deals because they just never really move the way you expect them to, and they move so dang fast. Also, if it were still in the $12 to $15 range, I might take a stab at it, but I do not like the price or the valuation of where it is at right now. I think in the $25, $24 range.
Nope.
It's just a little unrealistic and too high of expectations for me, because the way I look at it, the higher the price, the more expectations are put onto the company and the stock to perform. If this stock never makes it back down to the $12 or $15 range, then I'm probably just going to sit on the sidelines and wait for the merger to actually go through, and then if there's a dip there, I may reassess my position. Because ultimately, this is a very interesting EV play and one that I really enjoyed looking into, and I tried to be as objective as possible, but I already own 2 EV plays, Tesla and NIO, and for me, that's more than enough, and I don't have a lot of room left to diversify further in my growth portfolio that I share with all of you guys. So please consider subscribing if you found any value in this video at all, and drop a like for the YouTube algorithm, and check out our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. If you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.